A good start to the day of trading. Nifty has managed to open above the 40-day exponential moving average, which was at around 22,200 odd levels. What's your sense of things now? Is this just that a pullback, or do you think the worst is over?
Good morning, Suyash. Well, it's the geopolitical tensions which are playing heavy on the market, and volatility has picked up significantly. Now, the question is, where does this market bottom out at the current scenario? So, if I were to see technically, the picture signals that 22,000 basis spot Nifty plus minus 50 odd points. That's a very strong support for the Nifty index. And today being the weekly expiry for the Nifty, the opening itself is suggestive that we did show a positive trades post the gap up opening. There is a bit of a sell-off, so volatility will be there as we are entering into the expiry week. But the broader sense is that there will be some bit of a recovery attempt near the 22,000 mark. So the trend is still intact, though the recent trading session has seen some bit of a pain. 21,800 positionally is one level you need to keep in mind. Till those levels are held, the levels would act as a very strong support zone from the next 8 to 10 trading sessions, and that will be the test for the market whether they manage to hold or not. My assumption, or going by the data points, is that before the expiry week, you will have some recovery coming in. Maybe that happens today itself or from the 22,000 mark. But my sense is 22,400 to 22,450 would be a bounce which you can look forward to. So yes, volatility will be there. Market will try to search and find a bottom around the 22,000 mark. And the sense is that there will be a recovery on the cards as we enter into the elections from 16th of April.
All right, and we have actually corrected from the day's top. In fact, both indices, Nifty and Bank Nifty, are pretty much have wiped off most of the gains that came in the morning. And Nifty Bank, I mean, we are around that 20-day moving average. That's where we closed. We managed to reclaim that on Tuesday. Even this morning, we went up as high as 47,800, but now we are back down by about 300 points from the intraday high. Is Bank Nifty again going to play a spoil sport, Akshay? What's your sense of things over there?
See, the theory is that the parameters from a trading perspective is a bit oversold. So technically, as you rightly mentioned, some moving average support will get to the rescue. Also, if considering the monthly expiry next week, there is a good chance that the market will make a recovery attempt. Also, if you look at the prior history, whenever there has been a war-like situation, be it Ukraine or Russia in 2022, or as a matter of fact, between Palestine and Israel 6 months back, the immediate pain post the event has seen a correction in the next 3 to 4 sessions. But whenever the recovery has happened after such events, it has been tremendous. So the expectation is that the markets should reverse. Even as a matter of fact, Bank Nifty is in the search for a support. As we are trying to come out of that pain point, there will be some bit of volatility, but broadly the sense is that support of 47,000 for the Bank Nifty would be an important zone if you are a short-term trader. And yes, there will be a recovery, and the immediate target for this recovery would be 48,000. That's the first resistance I have, and the key resistance would be 48,200 to keep on your mind. So yes, be ready for a recovery in the indices, whether it's a dead cat bounce or whether it really matures into a strong recovery. That we will have to decide as how the volumes and news flow plays out in the next couple of days. But a recovery is on the cards.
All right, recovery is on the cards for both Nifty and Bank Nifty. And for Bank Nifty, 47,000 support should hold in the short term. But the earnings season is on. Among Nifty 50 companies, we have Infosys, Bajaj Auto, HDFC Life Insurance that are expected to report their fourth quarter numbers today. Let's start with Infosys. India's second largest IT company is likely to witness a revenue decline for the second quarter in a row, while margins and profits are expected to increase marginally, aided by operational efficiencies and lower on-site expenses. Revenue is expected to decline by about 0.5% quarter on quarter in constant currency terms, and it's expected to come in at around 38,640 crore versus 38,821 crore in the previous quarter. Infosys's profit after tax, which is PAT, is likely to go up by over 1% sequentially to 6,180 crore from 6,113 crore earlier. Margins are seen growing up by a modest 20 basis points, coming in at 20.7% in the quarter under review. And EBIT, which is earnings before interest and tax, that is seen coming in at 7,995 crore, which is about 0.43% higher from the previous quarter. I mean, there are multiple things that we'll also need to watch out for in the Infosys number. The numbers, of course, I think broadly most of us are expecting them to be muted, but the guidance that Infosys will give for the financial year 2025 will be closely tracked by investors and analysts, as it would set the tone for the entire fiscal. Most brokerages are expecting Infosys to maintain its revenue growth guidance in the range of 2 to 7% for financial year 2025. They also expect Infosys to maintain its operating margin guidance for the current fiscal in the range of 20 to 22%. The IT giants hiring in the last quarter and the plans for current fiscal year will also be keenly tracked given the decline in net headcount for the fourth straight quarter in the October to December period. Remember, the company had also announced a hiring freeze at campuses last year. Other parameters that the street is likely to track will include Infosys's outlook on spending and discretionary demand, its artificial intelligence deal pipelines, as well as announcements related to buyback or special dividends. Akshay, I'll come to you now. Infosys is in a bit of a rough patch. I mean, it has been in a rough patch since early February, has declined about 20% from its peak, and on Tuesday it was a top loser among Nifty 50 stocks. It is in oversold territory, Akshay. RSI is below 30 now. So do you see a pullback if the results are good? And also, what if they are bad? How much more can the stock correct from here on?
Yes, you rightly mentioned Infosys is in a rough patch. In fact, from 1720, the sell-off has been more of a one-way declining trend right up till 1420 odd levels where we closed on Friday. And if you look at the broader trading parameters still in the futures and option segment, there is a lot of short positioning which I see is Infosys. Today, the start has been a bit better considering the fact that results are there. So there's a bit of short covering as I see. Now the question is, will there be a pullback or will the slide would continue? Technically, still it's a weak trend. Yes, as you rightly mentioned, the RSI is below 30. There are signals that oversold parameters may eventually give way to a slight bounce back theory. But considering the given parameters right now, even if there is a bounce back, it has to be a mild recovery. So right now, considering oversold parameters, my expectation in Infosys that it might be confined in a range where the upper end of the range at the best can work out to 1480 on good set of numbers or even some bit of a positive news flow post the result front. Now, if the results don't go as per expectation, then where do you see Infosys? Technically, the strong support is placed at 1360. So that's a very strong value area on the price charts. And my sense is that if in case those levels are hit, it would be a screaming buy for Infosys because those are good trading parameters where you can consider taking a buy point. So the sense is a moderately bullish view in Infosys. Expect some bit of pullback from current levels. 1480 is the best case scenario you can look at on the upside from a short-term trading perspective. And on the worst case downside, 1360 would be the level to buy on dip in case the post results, the stock offers you that opportunity.
All right, 1480 on the upside, 1360 on the downside. That's the call on Infosys for the short term. But moving on, Bajaj Auto is another company that will report its numbers today. The numbers should come out by noon of, today. And the company is expected to deliver another strong quarter backed by margin expansion and strong volume growth. Revenue is likely to expand by 25% year on year to 11,118 crore for the quarter under review compared to 8,904 crore in the year ago period. EBITDA, which is earnings before interest, taxes, depreciation and amortization, could increase 28.8% to 2,211 crore in the March quarter against 1,716 crore in the corresponding quarter. Operating margin shall increase by about 19.3% versus 19.8% in the previous period. 19.8% this time versus 19.3% in the previous period. And profit after tax, that could increase by about 30% year on year to 1,870 crore. Among key factors to track will be total volumes that are likely to have gone up by about 24% year on year to 10.69 lakh crore versus 8.6 lakh units. As for the stock, I mean, Akshay, it has been a tremendous wealth creator. It has increased investors' wealth by about 110% in the past year alone versus about 22% rise in Nifty. Even earlier this month, I mean, it was at a record high of 93.56, but since then it has declined by about a good 4%. And I mean, is it the right time to buy considering it has come off its peak?
Yes, charts are suggestive of a strong price setup. If you look at the last 5 to 6 trading sessions, it's been a cool-off phase for Bajaj Auto. Not much of a correction the way the market is volatile. A slight dip of 50 odd points is what we have seen. And the charts are still suggesting that, 9,500 targets can be on from the short to medium term perspective. So 8750 is a support zone. I'm still positive on Bajaj Auto till the levels of 8750 are held on. And in case the results turn out good, and in case you have a breakout of this consolidation zone, the breakout level would be 9150 basis spot. If that breaks out, expect strong momentum surge, which can see the stock testing the target areas near 9500 in the short term scenario.
All right, Bajaj Auto may go up as high as 9500. That's the word coming in from Akshay Bhagwat. Sir, thank you for giving us time here on News 9. Always great insights from you.